Tackle today, Matt and Mark Justice, the Justice Brothers, breaking down all of the key news. Key news today is very simple. Jay Powell speaks. He officially pivots at Jacksonhole. We're going to break that down, then look at lots of charts in different areas of the market to see the market reaction to those. But Matt, Jay Powell, highly anticipated speech. All market eyes were waiting for 30 minutes after the market bell. Very optimistic speech. I'm going to go through some of the highlights and then I want to get your big takeaway from it. I think it is safe to say that this marks the day that the Fed officially pivots, as Jay Powell telegraphed that rate cuts are coming. That absolutely rate cuts are coming, but that the pace of those cuts and how big they might be, that's going to be where a lot of the market debates is centered. As Jay Powell said, there's going to be, data dependent, measured on economic developments that occurred. But, I don't think you can walk away from this. When I looked at it, when I saw Jay Powell speaking, Matt, there was this very optimistic tone. He signaled that a rate cut was coming, that inflation had been not victory accomplished, but a very victory accomplished type speak. But he emphasized, and this was a key point, he emphasized that they will not tolerate further weakening in the labor market. This was a key point of emphasis, and that the balance of risk were very skewed towards the labor side, saying that they are not going to stand for economic weakness and certainly not labor weakness in their view of policy. Matt, what was your big takeaway of this very important speech?
Yeah, we'll certainly have an extended conversation on Jackson Hole and Powell's speech and everything that he said. We'll have that detailed conversation in the Trading Justice podcast this weekend, and definitely check that out. But the simplest conclusion here, and there's going to be a lot of takeaways, a lot of hot takes, and a lot of conversations on this one, what it all means for the future. I think like many times the Fed comes out and says something, we have a hot take, we have an immediate reaction, but then you want to take some time to really kind of digest the information, how it's going to impact the entire marketplace. So definitely extend a conversation in the Trading Justice podcast this weekend. But the simplest take here is really, really simple, quite frankly. We've been in an extended pause for over a year, and the pivot is here. It's really as simple as that. We've been debating the pivot for the last 9 months in the market, in the data dependency stages of the last year. Some of that data dependency has made us overtly concerned on inflation, i.e. the first quarter of this year. Some of that data has made us a little bit more concerned on the labor side of the equation, which is obviously where the market is right now. And that's what Powell kind of confirms here today. Mark, you said he stopped short of declaring victory on inflation. I don't know about that. I think the only thing he was missing was the mission accomplished banner across a nice little Navy ship like George Bush did in 2003. He felt very confident on.
Well, Matt, he was making jokes about transitory, like, "Hey, yeah, we got that one wrong, but we finally won the battle."
There's a joke about transitory, and I know you know that, I know that, but he spent half of his time talking about transitory and telling the path of the inflationary side of the equation. I saw this as a legacy speech out of Jay Powell.
That's a good call
on the transitory side of the equation. The emphasis, I think, moving forward is certainly still on data dependency, but that data dependency is now clearly shifted to the economic side of the equation and not the inflationary side of the equation. CPI reports, PPI reports, PCE reports, labor market data with wage growth become less important. What becomes more important is economic reports, such as obviously labor market numbers, initial claims that have always been the case. But you got to start putting in PMI numbers and economic data outside of the labor market as a little bit more important as well, as the Fed clearly shifts here from in the dual mandate from the concern on the inflationary side to now, quite frankly, very, I don't want to say very, but concerned on the labor side. And Powell signaled their support for the labor. They're going to be very, very, focused on labor market and economic data points. But once again, the data dependency is shifted towards the labor side of the equation. And now the question becomes the pace of the cuts. How quickly does the Fed go from 5.25 to 4%, for example? How quickly does that occur? That's where the data dependency still comes in.
And that's where the market conversations are going to be for months to come.
Yes. Well, that's the thing. Whenever he keeps data dependency language, which he certainly did here, it's just kind of half now, right? Instead of data dependency clearly focused on both sides of the mandate, now the data dependency is clearly shifted to the economic side.
Yeah, and particularly labor. Particularly labor. I mean, he talked about, he mentioned labor multiple times in the speech. Now, Matt, we're seeing a variety of market action. Got a high base here on the SPY, but you were seeing pretty robust price action in every area of the market, from precious metals, bonds, the different markets. Let's flip through some charts, take a look at what we're seeing from a technical perspective.
Yeah, I got a little consolidation this week in the market, and that's kind of what the base case going into the central bank this week was. Is give us that secondary pattern, and you are certainly seeing a high base in the S&P 500. And when you're looking at the overall price response from Jay Powell and the central bank from right about just a little bit about an hour ago, what you saw immediately was the algorithm response to the top side, confirming that we are going to in fact get a rate cut in September, but it's been really, really choppy. What we haven't seen is a tremendous amount of volatility to the downside. So it's been choppy in general. That is expected, but overall, I would actually say a little bit less choppy than I would have anticipated coming into the central bank itself. When you're looking at some of the other indexes out there and you're looking at it from a lay of the land perspective, you certainly have seen a little bit more price appreciation in interest rate sensitive areas of the market, such as IWM, for example. You can see clearly you're having a little bit more liftoff in IWM than you are the SPY, as you're seeing interest rate sensitive areas of the market trade on momentum a little bit more in the early innings. And when I say early innings, these are 15-minute charts on intraday analysis. But once again, it's when we do have an interest rate cutting conversation, usually that does help out those interest rate sensitive areas of the market, which IWM, small caps, obviously ARC is going to be a part of that as well. ARC, as you can see on the intraday, a little bit consolidation right after that nice little upward movement in price. And so you are seeing interest rate sensitive areas of the market, and which is understandable given the fact that the market just got confirmation that they are in fact getting a cut in September, and it could even easily be in the 0.50 range. In fact, the probability shifted out of the central bank just slightly. Yesterday, we had a 24% probability of an interest rate of a 0.50 interest rate cut. Now we have a 32% probability of that occurring. And in that, in that technical view, you will see ARC, IWM, the Dow Jones, these interest rate sensitive areas perform a little bit better than the spiders and the aggressive areas of the market.
Yeah, Matt, I gotta jump in here. If the bond market, if the rate cuts market is already shifting this to higher degree of bigger cuts, the price action makes total sense on the interest rate sensitive areas of the market, doesn't it?
It does. But again, that's a real short-term situation because you're adjusting the probability of the 0.25 to 0.50. In general, I think the market heard what it wanted to hear today. Now it's a matter of the technical conversation, because as of right now, it becomes technical, and a little bit of NVIDIA next week.
Maybe a lot of it, NVIDIA for technology itself next week. Matt, will you give me gold, oil, all the commodities? Because one of the things that we've highlighted in the Traders Lounge is that this Friday event was not just a stock market speech, was just not a bond speech. This was a market speech. It was one of those events that transcends all markets. And I know my currency loving brother, I knew what chart he was going to go to right off the bat.
Well, it's an interest rate conversation. It's a central bank conversation. The immediacy of the impact is always the most truthful in currency, then commodity, and then in the equity market. And so you're seeing the truth of the situation here today on the dollar. The dollar was trying to fight a 101 support bounce yesterday, gets blasted here today on Jay Powell's announcement that they are going to be doing a rate cut. And as they are going to be doing a rate cut, when you're having a conversation on, well, we may do a 0.25, we may do a 0.50. The dollar's not going to do well in that type of environment, and obviously we're seeing that nice little violation of that 101 level. You look at this on a longer term standpoint here, you're coming into pairing right there around that 200 weekly moving average. We're talking about some major and very important support tests coming up. If we do see violations of 100, you're going to want commodities. Period. End of sentence.
Period. End of sentence. It's not complicated.
It is not complicated in that environment. Gold running on the exact same opposite gasoline as the dollar is right now. Big up yesterday on the dollar, big down on gold, big down today on the dollar, big up on gold. Real good pattern here though, kind of hovering in that 25.50 level. Nice consolidation, really hasn't done anything wrong here. It looks pretty good and obviously should be on the radar of every single person at Tackle Trading. When you're looking at the other commodities out there, we were talking a little bit about silver development at two numbers earlier this week in the Tackle today. That would be 28 and 30. Keep an eye on 30. Silver might want to break instead of retrace there in that condition. Copper getting above the 4-2 handle briefly, only to consolidate right underneath that as well. Keep on consolidating copper. Bring that 50 period underneath just a little bit. But word of the day, just technical thought of the day, the dollar breaking that 101 level in the weekly chart coming to pairing. That to me is the most important chart in the entire market right now.
Yeah, listen, we are going to have a really fun, thorough conversation on the Trading Justice podcast this weekend. Break down the everything that happened on Powell, look at the charts, give full analysis. Matt and I tend to enjoy these conversations, and we also enjoy every aspect of tackle trading. Come see what this amazing community is all about. We give our all for our members, and they stay happy and they stay profitable. So go to tackletrading.com and sign up for that 15-day free trial today.